Hi, I'm Ben Reppond. Welcome to my Market Insights broadcast. Today is November 16, 2022. Thank you for watching. We'll cover the various elements, the charts, the dashboards, direction of the market with my comments. Beginning with the dashboard, these are the major indexes. This would cover the going kind of from the top to the bottom. If you look over in the center section are a set of numbers. Those are percentages. That's the percentage gain or loss of that particular index on this was as of Friday, for the week, the month, the quarter, and year to date. So 5 sets of numbers. The one I focus on to organize this is the year to date. The one with the least loss, in this case, at the top, and going all the way down to the bottom, the one with the most loss. So at the top, the one with the least loss year to date, it has been, I think, all year, is the Dow, the small cap Russell 2000 index, SPY, the S&P 500, EFA, the developed markets, developed countries, and EEM, the emerging markets, and QQQ, the NASDAQ 100, and finally TLT, which is the long-term government bond ETF. And they range from a loss of 7% all the way down, in the case of TLT, to a loss of 33%. I think last week it was down 36%, so it's a little bit of a gain this week. To the right of those numbers, you see the indicator, if green or red, if they are above green or below red, the 20, 50, 100, and 200-day moving averages. So each one has its own average. So you'll see that all of them, even including bonds, had a good week and therefore are above the shortest moving average, in this case the 20-day moving average. All of them except bonds, all the equity funds are above their, all the moving averages, 20, 50, 100, 200-day moving averages. And then, it goes across. Most of them are above their 100, and a couple of them are even above their 200-day moving averages. So definitely positive. There are 20 out of 28 green dots versus 9 last week. So again, a bullish sign for the market, at least for now. And then when we take the S&P 500 and break it down into its component parts, you can see these are the sectors, the 11 sectors within the S&P 500. Again, I do the same thing. I take 4, the week, the month, the quarter, the year. Which one is the best? All the way down to which one is the worst. The best is oil, energy, which is XLE, the energy sector. The worst is IYZ, which is telecommunications, down about 30% for the year, and everything else is in between. All 11 are above their 20-day moving average, and 10 out of 11 are above their 50-day moving average. So as the market had a good week, one of the things that is you look for as a sign of bullishness is volume, and the volume was good. The other thing you look for is breadth. How was it just a few sectors that would pull the index up or the market up, or was it across all the sectors? And you would have to say, looking back at last week, that it had volume and breadth. Then you look at the 100-day, all but 3 are above their 100-day moving average, and 5 out of the 11 are even above their 200-day moving average. And again, energy by far leads the pack with a very strong positive return. This is the S&P 500 index measured over the past year. It's a weekly chart. 1 move equals 1 week. And you can see it goes up and down, but general direction is down. And I show that with the black arrow. To the far right, at the bottom, you can see the recent trend, which is up. And particularly Again, it's a weekly chart. I've been using daily data in the previous data, but this is weekly. But from a weekly perspective, you can see that it's above its 20-day moving average or 20-period moving average, and in general, on the short-term basis, is generally moving up during the past several weeks. This is a ratio chart that compares the growth component in the S&P 500 to the value component. Growth companies are primarily focused on revenue. Value companies are primarily focused on profit. And you can see that through the past 12 months that the long-term trajectory is definitely down. And what that favors is value kinds of stocks. When it goes up, that favors growth stocks. So last week is marked by this sharp move up at the end, showing that growth, at least last week, came back into favor and over value. Both went up, but growth went up even more. This is also a ratio chart. This stretches out to 24 months, gives you a bigger context. On the far left of the chart, you can see it is a sharp move up. In this case, IWM, the Russell 2000 Exchange Traded Fund, is the numerator, and SPY, the S&P 500 ETF, is the denominator. So if it goes up, that favors small cap. If it goes down, it favors large cap. So small cap was definitely in favor. This goes back into late 2000 and early 2021. And then large cap came into favor and went down sharply. I show that with the first black arrow on the left. And then it sort of hit a bottom, and on the second arrow, the one to the right, you can see that gradually there is a gradual trend upward for most of this past year favoring small cap over large cap. It's interesting. Both were down. Both still are down. But it's an interesting ratio to see that small cap seems to gradually be coming back into favor. And this is an absolute chart showing the Russell, the long-term, 20-year long-term government bond exchange traded fund, TLT, showing the movement of this over the past 30 months. Again, it's a weekly chart, so one move equals 1 week. And you can see the trajectory on the right is definitely down below its 20 period and certainly below its 50, 100, and 200 period moving averages. But you can see at the bottom, it is starting to move up a little bit. So again, bonds had a good week last week, and that's illustrated by the move at the bottom of the chart. I had a viewer who asked me to cover the dollar. I think that's a good idea. So the dollar has been running up a lot, and which makes it very favorable in buying foreign goods or traveling or shopping in other countries. However, it makes it very unfavorable for those in other countries to buy anything in the U.S. or to invest in the U.S. markets, because their currency is down relative to the dollar because our currency is the reserve currency. So you can see where it's gone relative to its 20-period moving average as of Friday, but you can also see the recent sharp trend down. So when something moves that sharply, that quickly, I would say it's probably going to have more down periods from here. So we'll cover that going forward. But again, it's, I think the fact that the dollar has gone up so much is kind of a head scratcher for a lot of people. Like, it looks like, with all the printed money with nothing behind it, and you think, okay, the dollar's got to become worthless and more worthless. Not really. It's become more valuable. But again, you've got relative to other currencies. So I think we're still viewed more favorably in the world for a lot of reasons. Ron and Sana actually articulated some of those. But definitely the dollar is up and is now, we'll see if it's broken the trend line. We'll see where it goes from here. Gold, again, had another good week and is now moving. It's up above its 20-period moving average. Still has a long-term trajectory down over the past couple of years. And silver had a very good week, another good week. And so it is now showing strength, moving higher. But still, over the past couple of years, still in a downward trajectory. And then the ratio of the two, this shows that when it goes up, this is favoring silver. It's the numerator and gold is the denominator. So this shows that silver has got more strength in the past month or two than gold has. But it looks like both of them are starting to show some strength. Have they bottomed out here and moving on up? Could be. We don't know. And then we've got the volatility index, the VIX, and it's kind of a reverse index, because when it comes down, this shows that there's less volatility in the market and the market is likely going up. So they kind of move in opposite directions. And it broke below that number 24, which is my arbitrary number, and generally considered investing conditions are more favorable when it does drop below 24, and that has been the case, and we'll see where it goes from here. But I'd say the VIX is a positive and favorable indicator. Bitcoin, if you watched my other broadcast I did yesterday, you know that I showed this chart. I just thought I would show it because Bitcoin continues to collapse, and this is the chart of about a year. It's down about 75% for the last year. And I was getting a lot of conversations with people about a year ago. Do you think I should buy Bitcoin? Do you think I should buy Bitcoin? And a friend of mine even said, who's a very conservative investor, said, do you think I should own a little bit of that? And I said, to me, I wouldn't touch it. So, I know that he's conservative in his investing philosophy. And, I said, do what you think you want to do, but if it were me, I wouldn't do it. So I don't know what he did, but anyway, that's that. And then I'll cover Asbury. All of their indicators are positive, no surprise, because the market is definitely, again, had a very good week and ended positively. When you compare, this is the relative strength of the ETFs for the certain ones versus others, and there's really only 3 of them that merit a green box for all 3 time periods, the weekly, monthly, and quarterly view, and that is that stocks, even though they're down, they've done better than bonds. High beta has done better than low volatility, and the developed markets have done better than the emerging markets. The U.S. versus the world. Now, this is totally interesting to me, and I can't give you, I don't have a theory on it of why this is the case. But again, we look at green boxes to show relative strength. So when you look at the countries, particularly with green boxes, particularly those that are in weekly, monthly, and quarterly views that are favored over the U.S., every single one is greater than the U.S. The U.S. does not have a single green box out of all of these countries or regions of the world for the last week, the last month, or the last quarter. Interesting. So you have the ones that made the list are Peru, Australia, Italy, Japan, Switzerland, France, Singapore, Taiwan, South Korea, the Eurozone, and the Pacific Zone, all doing better than the U.S. As I said, gold and silver had a good week, and they've had a couple of good weeks, actually. And the price of gold is $17.75. Silver is now up above 20, and is at $21.79. Now these are spot prices. You add the premium for retail sales on top of this. And they're gold up 7% from a week ago and silver up 4%. Now we saw some declines over this past year, and I showed that in the previous chart. And so these gains, for those who are interested or who own gold or silver, I think some people are appreciating seeing some strength out of it. And as I said, this is the the arena for the Miami Heat, the basketball team, Miami Heat. FTX got naming rights to call it the FTX Arena. When you're a company, you're not a real company. You don't have real assets. You're, emerging company. I don't know how many employees they have or what their management structure looks like, but it looks like it's, I don't know, something that Sam Bankman-Fried kind of, I won't call it a toy, but it's not what I think of as a real infrastructure company. And to go and name an arena after your company, I don't know, that just doesn't strike me. But okay, well, thank you for watching. Leave questions or comments in the comments section. I will try to answer them. And thank you again for watching.